Excellent. It's been a very busy day over in this neck of the woods, as I'm sure it
Yes,
has
it
been in
has.
your neck of the woods as well.
Very busy day. When they say fast-paced environment, that's what today has been, that's for sure.
Oh, tell me about it. The day just kind of, I blinked my eyes. The market was closing already. All right, so let's go ahead and get this legal mumbo-jumbo out of the way here. Before we get started, just want to make sure everybody is aware that we're publishers of information here at Trade Ideas. So everything that we share with you in these webinars is strictly for educational purposes. If you do need the advice of a registered representative, you can call many places to get that type of service. So if that's what you need, please seek out a registered person to do that type of consultation for you. Okay, so a lot going on today, ladies and gentlemen. As you may or may not know, we are currently, today is the first day of our open house, which is going to continue. Sign up, and correct me if I'm wrong on this, Steve, but through Wednesday. Wednesday is the last day that you can sign up, and if you sign up on Wednesday, you will still get a full 5 days of access to the full-blown product. That's including Holly, the AI, price alert windows, RBI and GBI windows, everything in the upper tier subscription platform, subscription rate, and the back testing.
Mm-hmm.
So, you know, once again, that's unlimited back testing, complete access for $8.88. You can't beat that. Basically just keeps us from losing money on the deal, paying your exchange fees and whatnot. We are also hosting a price alert contest. Whoops. So for those of you who do participate, you can create your price alerts, and I believe also, Steve, the deadline is Wednesday as well, by the close?
Yeah, both of these deadlines, I'm guessing, unless Scott will chime in if I'm wrong, but midnight East Coast, 9 p.m. West Coast, those are going to be, I guess, the cutoffs for both registering for the 5-day open house and then also the cutoff for submitting your price alerts to that exact link that you see right there at trade-ideas.com/price alerts. There'll be a way in which you can upload, copy, and paste your formula into that page, and then we'll be able to export that and monitor the contest, which will be basically whoever has the best percentage gain on their 5 price alerts by close of Friday. It all has to end at close of Friday. It all starts at the same time, and it all ends at the same time. It's really the only simplest way we can do it. So it'll be a fun little deal. Whoever wins is, like Scott said, it's $1,800 value. Should be a fun time setting those alerts and entering that contest.
Yep, and runner-up, second place, still gets something. Consolation prize of a $99 value training session for second place. And so, you know, you get your alerts turned in by the close or, you know, midnight Eastern time. Thursday and Friday are the days, and then whoever's up the most at the end of Friday is the winner.
Yep, it's all self-explanatory on that page. Just pull that page up, and everything you need is on there, including...
Perfecto. All right, just to refresh everybody's memory, well, mainly it's for those of you who are probably on the demo or participating in the open house currently. Maybe you haven't had that much exposure to trade ideas in general, the technology, or more importantly, the vibrant trading community that we've molded around the top-tier technology. So we have 4 webinars a week. We have this one, obviously, on Mondays with myself and Steve. On Wednesday, we have the Q&A demo with Dan and Brad, and typically the trade of the week with Steve later in the evening. And then we wrap it up with Andy's Trading Studio on Thursdays, and of course I ride shotgun with Andy on Thursdays. So lots of good content, lots of repetition on how to use the technology, how to interact with the AI, Holly, and of course, why don't we just dive right on into that? But before we get on to what is Holly and explaining how we can interact with Holly, first off, Steve, we got to talk about the market and you know, where it's been, where it might be headed.
You want me to do that?
Thoughts, concerns? Sure, let me flip it over to you. And I believe you now are the presenter.
let's take a look here. Let me get all my little pony shots off the screen.
Yeah, make sure you cover up all your secret formulas.
Yep.
You wouldn't want anybody pilfering.
Oh boy, as soon as I start talking, here comes a jet. I live near Miramar, Top Gun, that old movie from the 80s in San Diego, and every now and then we get a jet, but yeah, it sounds like he's cruising by. So let's go back to our trusty main chart here, which is the S&P exhibited by the SPY ETF. When we last spoke, this upper level here was certainly defined with the rejection wick that we had, and of course corresponding to prior resistance and prior support. Definitely a pivot level that is out of reach here at the moment, up there at 217.37. This was our lower extreme, but we went ahead and pierced it and had a nice reversal bounce off that. So really all we got to do is basically move that line down to our new level, which if we look left is also kind of interesting. There's a gap down here that may want to be challenged if the continued price action does like it did today. We had that bounce on last Thursday, gave most of it back after a big gap up on Friday, and then continued to give some back today. So we're kind of heading back for a possible challenge of this level down here at the 211-ish area. Let me turn my crosshairs back on so we can kind of see. Yeah, about 211.25. Something like that. So this is our new trading range that we are in. We are now in October, and as you'll notice, October is kind of the month that gets the stigma of having the most volatility. And even though this was back in September, still, it's been a lot of volatility, a lot of back and forth, pretty wide range that we have here. But it looks like after that bounce, the price action is going to want to continue to maybe come down and test it again. It's just the feeling I got after the lack of follow through. Again, this could have been a very nice day here, breaching the levels, the obvious levels right here, running the stops. If that couldn't make a follow through and close on lows and go lower, this is the kind of candle that really should, breed some additional bounce back up into the action. But we really didn't get back up higher into the action. We had a small gap up, like I said, on Friday. And since the opening on Friday, red candle down, opening today, red candle down. So we're probably coming back to test this level. Let's take a look at what the Qs were doing. If you recall, they were back here leading us to a possible maybe another move higher in the market. But the downdraft pretty much brought the Qs back down into their trading range. And as you can see here, this trading range is still well defined in the Qs. It goes back to Thursday's low and Friday's high, and that corresponds way back here with highs back here and lows back here as well as filling that gap. So this is a very interesting level. It's also showing up here, basically 115, 116 level. Call it 115.90 maybe in the Qs. But the way in which we didn't really follow through off those green candles in both the spiders and the Qs on Thursday, we're just kind of lackluster, falling back to test this level again. So kind of feel like that's in the cards. I'm not predicting it, but I feel like I wouldn't be surprised if we do see a test of these levels in the Qs and the SPYs this week, matter of fact. So that's what I'm seeing. It's just, I don't know how much, though, this election is really baffling this market and making it a lot of back and forth action, but I'd be curious to note, in 3 weeks when the election is finally over, if we get some sort of a release from the price action that we've had over the last 3 or 4 months here. I mean, all the way back here, very choppy price action, then an up level, and then choppy action for another month up here, and then now down here for some very volatile, violent, choppy action between these ranges. So I'm really hoping that the elections and maybe, these seasonals will bring us out of the crazy funk we have of red light, green light, go start, go back, go. That's all I got.
Yeah, and Steve, that's not that crazy of an assumption. I mean, it makes a lot of sense. I mean, anybody that's been paying attention knows that this election is unlike anyone we've ever seen or may well see in the future. So I think everybody's kind of the same mindset, including the market. We're just ready for it to be over, right? Just get it over with, and I think the market is kind of mirroring the same type of mentality that most people are. Just get it over with and let's move on. Indeed, indeed. Okay, so due to the fact that we might have a lot of people in here that have never seen the product, we're going to spend a little bit more time today on explaining, okay, this is Trade Ideas, this is Holly, and these are some of the other windows which are contained within Trade Ideas, which are really fantastic and give us a lot of functionality as well. And then if time permits, for those of you who are new, we'll do some general Q&A towards the end there. So for you regular attendees, please bear with us. We do have a bit above average ratio of new people that have never seen the technology. So let's just get right into it. Before we talk about Holly, we're going to see when we get into the trades and her performance. Today was a losing day for Holly, but it was just a matter of if, not a matter of when. She's been on quite the winning streak over the past, gee, Steve, what is it, 5, 10, 15 sessions or so, posting some pretty phenomenal gains. And, you know, here's the picture that speaks probably more than 1,000 words. Which is, this is when Holly first came online, very last day of December last year. And this is her progress comparing herself to the S&P since that point in time. Pretty wide gap here. Here's a little pullback after today's 2 and change down day on risk off. But still, the gap is very wide and hopefully will continue to get wider. And just to reiterate, you know, when we brought this technology, Holly, online, we had some expectations, but when you're dealing with a technology of this nature, you just never really know. The only thing that tells us whether it's being effective or not is time and performance. And so we're not quite a year old. Holly's not even quite a year old. I think she's completing her 10th month of life this October, so she'll be, you know, around about 1 year old at the close of the year here. So for a 1-year-old, we couldn't be more pleased at her performance, and you know, we all learn with Holly as we go through this process. All right, so minimize that and get to my software. I got minimize. All right, so here we go. Just make sure I've got the right time frames up here. We've got a 5-minute intraday here. We've got the daily over here for taking a peek. And so Holly today, here are the strategies that showed up for trading. Quite a busy little collection of strategies that showed up for today's trading. And let me just get these stretched out a little bit here. So what do we have? Let's count them off. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 total strategies made the cut after all of the analysis was done after Friday's session, and we can see that 3 of those were shorts and all the rest were long. Now, you might notice these strategies down here had a 0 trade count today, and that is because just because a strategy makes the cut does not necessarily mean those specific parameters are going to be triggered, therefore resulting in a trade. So no trade out of these guys today. And the biggest producer today, this guy went a little producer of signals. Let me qualify that. The largest producer of signals today was this strategy pushing through resistance. And we see variance of win percentages for the day versus expectations. This one, I'd call it a little bit of an outlier because usually we don't see such drastic performance versus expectations. But hey, things happen. They especially happen on slow market days where the volume across the board today was not too good. And, you know, this brings up a very good point. Holly, her original design was so that we could produce a model to show our clients, this is what happens if you trade with statistical probability day in, day out, always incorporating statistical probability into your entry signals. Now, Holly, she's going to trade every day, whether we perceive the market to be conducive or not. And once again, not to bring this analogy up too often, but it is the perfect analogy, and that is, I live half a mile from the beach. When I walk down to the beach and the waves are out, what do I see out in the water? I see surfers doing their thing. Now, when the waves are rolling in at 1 foot, do you see any surfers out there? The answer is no. because why would they even bother to go out? Because they're not going to have any fun. Well, Holly will go out even if the surf is 6 inches because that's what she is programmed to do. And of course, some market days are more conducive than others, but that's a relative thing. You don't really know it because you're in the now and you have to kind of perceive it as it happens. As that wave unfolds, you have to get on it and assess it. So today, the waves weren't that good, but Holly gave it her best, right? Statistical probability today, as we can see, I'm on the risk-off factor here, and we can see she got a little bit green on the open, but kind of went down and just never really found any opportunity. So, therefore, lots of losing trades, more losing trades than winning trades, and so after everything was said and done, on this trade count, which we had, 25, 29, 32, 34, so 36 trades, down 2.84 points. Not the best losing day, not the worst losing day, but pretty much just in the middle of the pack. And to help illustrate, I know I showed you guys the performance chart, but I really want to give everybody just a little bit better idea of what's been happening and how, even though today is a losing day, big deal. Plus, we haven't even gotten into what I like to term the hidden alpha on some of the trades that Holly spit out today. So, just cast your eyes upon this little, price chart over here. These are the winning and losing days for Holly. So, way back in September, we had a losing day. But look, ever since then, pretty much winning days with very small losing days scattered throughout. So, very impressive run for Holly. So, the fact that she's down 2.84 today, not a big deal whatsoever. Now, the good part about that is that even when Holly is down, that doesn't mean that there's no alpha presented for us human traders to take a look at, which brings up another very good topic here, and that is, what is Holly's strong point? Her strong suit is statistically weighted entries, which are produced from massive, massive, massive amounts of calculations that are done every night. Things that even if we had a team of 100 people trying to complete those calculations before the next open, probably would not finish. So there's massive heavy lifting going on, behind the scenes, and that's what Holly's strong suit is, that statistically weighted entry. Now, Holly can't read charts. That's for us humans to do. So once you get familiar with, how to read Holly, things that are coming through, and you've heard us talk about this methodology over and over again, it does become second nature after a while, everything with repetition. So let's talk about the trades, and let's look at some of the trades that Holly issued today and how we could have taken advantage of those. So before we begin here, I want everybody to just kind of gaze upon the exit reason column here. There used to only be 3 reasons why Holly would get out of a trade. Stop loss was hit, a profit target was hit, or a timed hold came due and she exited. So 3 reasons. Now, I'm going to pull this chart over here one more time because you'll notice a correlation here. Holly's performance, and then we improved Holly's risk management here, and we started getting better and better performance. Because what we ended up seeing is that Holly would get into a trade and be up nicely, but the profit target or the stop loss had not been hit. The timed hold hadn't expired yet, but then this trade starts going the other way. Before you know it, what was once a nice winner has become a loser. And as we all know, that's a pretty quick way to go out of the trading business if you let your winners turn into losers. So we set up on the task to help alleviate that condition. Now you'll see profit save, reason of getting out of a trade, and reduce risk. So this is Holly, that if she's in a trade, as time gets longer, as you're in that trade longer and longer and longer, we've incorporated, in essence, a time decay type of variable in there. So the longer she's in the trade, If things start to get a little bit volatile, the more likely it is that she's going to go ahead and go, you know what, things are getting a little hairy here. I've been in this trade a while. I'm going to take my money. Or I'm going to go ahead and close the loss out and not sit around and wait for the stop loss to potentially be triggered. All right. So just want to clarify and make sure everybody has an understanding of what are the reasons that would get Holly out of a trade. And there's 5 different ones now. So
hey, can I chime in real quick? I'm sorry.
Absolutely, Steve. No, please.
I just dropped something. You know what Jamie's doing is he's explaining in layman's terms the basis behind machine learning and how we're teaching this machine to be better and how the machine is learning how to be better itself. Over the weekend, I found a really good article, and it's actually based on the exact back-end protocol that this AI uses. It's called R2D3, RPart, something along those lines. It did some curious digging on it. And there's a great link here, and if you scroll down this link, this is exactly what's going on. And I dropped this link into the chat window. So if you have the toolbar up, you expand that chat window, and it shows you, as you scroll down with a really nice graphical and some animation, how the data is perceived, processed, used, tested, retested, and then even at the end, it gets into what we do in sample data and out of sample data, where as it goes through and pushes the data through, it still has to send it through a test data. And without trying to get too complex, this is a great link for a 5 or 10 minute read, so you can really kind of see what's happening at the very bottom. The AI is running a program with all the back tests, and if those back tests look good, then those back tests go into a virgin sample of data that we call the out of sample data or the test sample, which is what's discussed on this really cool link that I dropped in there. So what I just wanted to show you guys that this is available, and it's a very educational link for how the machine learning process goes, and this is exactly the platform that Holly's built on. So for those of you who are tech geeks and really into that stuff, there's a good link for you guys to learn a little bit more about how Holly works.
Yes, excellent comment, Steve, and I read that article, and that is a really cool, they lay it out in a really understandable fashion, along with those cool little graphics that they thrown in there as well. So yeah, a very good read. Steve, can you hear me?
Yes, I can. I just want to
Okay. Things just got eerily quiet. I was like, did I get
started typing to an answer? Yeah, sorry about that.
No problem. Okay, so now let's take a look at some of the specific trades that were issued by Holly today, and we're going to be taking a look at why she got out, and then incorporating, you know, it's in its purest form here. It's machine Holly working with man or woman us. Right? Because Holly can't read charts, she's going to execute her script. If the timed hold is up, she's going to get out, whichever. Okay? However, having said that, let's just take a look at some of these patterns or signals that were generated today. And the first one we're going to take a look at is ARIA. Okay? So here's a really cool feature. Everybody take note. When I double click here in my charts, we have an arrow by the entry bar corresponding with a blue box over here, which is going to correspond with Holly's entry price. So if we just draw a line straight across here, and then we look at the reason. Why did Holly get out of this trade here? Well, profit save. So if we look at the 5-day bounce, and we go back and look at that strategy, 5-day bounce was centered around a 90-minute hold time. So she got out before the hold time was out, or excuse me, was up on a profit save, and booked 8 cents on the trade, which probably, if she was only up 8 cents, it was probably right around here. But the bottom line is this. If we decide that we're going to take the trade with Holly right here, and then we start getting this action right here, keep in mind it's nowhere near our stop loss, but as we know, sometimes trades go our way immediately. Sometimes they mill around a bit before they actually take off. So whether you participate with Holly on this initial entry or whether it brings it to your attention and you monitor it, okay, you're like, okay, well, I see Holly got long here at 11.23. Well, as typically happens, sometimes we're in the money quickly, and then we eventually take a little backtrack. So at this point, when we're experiencing this little micro consolidation right here, we're slightly out of the money, which I've gotten into a habit, and I urge everyone to do the same thing. As soon as you see Holly enter a position, whether it's long or short, and you see that little red come in, it's always a very good idea to basically create a price limit alert for the entry price once again, which would be, perfectly aligned with this line here. And to do that, we just right-click and set that price alert with this mechanism here. Now, obviously, if I set it, it would just auto-execute. But you get the point here. So if we took 100 shares with Holly initially and we're slightly out of the money and we set that price limit alert, then boom, we get excursion number 1 and 2 back up into the trigger zone. So whether you add to the position or sit with what you got, doesn't really matter. But this is happening a lot on these Holly trades. Now, it just so happens that during the entry bar here as well, after it pushed through here, it also was completing a pattern that I like to see, which was a simple range break from the open, right? So first off, I see a signal generated by Holly, which coming into the session had a statistical weight of 69.7% chance of going my way today. Then I also happen to notice it just happens to coincide with a range break, which is the pattern that I really like to trade, assuming there's a decent amount of volume coursing through this guy. ARIA, needless to say, it's all over the place. Usually trades a lot of shares. But in any case, statistical probability coupled with the pattern that I like to see, it's simple, it's very powerful. And, talking about statistical probability, I was having a conversation with some of my colleagues earlier in the day talking about if you just polled 100 active traders at random, and you said, well, tell me a little bit about how you're, incorporating statistical probability into your trading practice. You'd probably get a lot of people that didn't say a whole lot. Most people right off the bat would be like, well, I know what statistics are, but I haven't really been incorporating them into my trading routine or assigning a probability value to each and every entry that comes my way. Most people are too hung up on, technical and analysis and certain studies and whatever. So that's another thing to point out here. You don't see a bunch of crazy moving averages and studies and things of that nature on my chart. Now, if you laid those studies over this chart, you would definitely, more than likely, see a lot of correlations. But that's all they are, right? The statistical probability is a very potent factor in assessing what may or may not happen in the stock market. That's why the card counters in Vegas have to fly under the radar, because they know that, number one, if they get caught, then they get booted out, if not something much worse. But the casinos don't like that, because they know that if these guys are using statistical probability in the long term, they're going to siphon money out of the casino. They don't like that. That's why there's a double zero on the roulette wheel, because if there was just a zero, then they wouldn't have an edge, and there wouldn't be roulette in the casinos. Now here, if we're patient and apply our methodology day in, day out, fortunately there's nobody that can come and kick us out of the market. So with statistical probability on our side, even though we will have losing days, and it's sure no guarantee, but however, our chances of success are much better. So this is just a simple example, and we see this a lot in many of the Holly plays. So, after everything was said and done, Holly booked her 8 cents, and if you held to the close, 11 cents was your result, but to the downside. But look, what we can't see right now is maybe we exited some here, or maybe on the way back down, right? So there's a lot of alpha hiding in these patterns that we cannot necessarily see in the reports at the end of the day, or sometimes even in the middle. Okay, so that was just one example, ARIA. And Steve, I know the next one that I pull up
Real quickly, and I just
All
want to make sure,
right.
because somebody asked the question, if you're looking at time zones, if you're observant people, somebody was that asked me earlier, these times all look like they're pre-market. Just remember, guys, the time entries, we're on the Pacific Coast here. So if anybody was
Correct.
wondering about that, afraid to ask,
Hmm.
we are Pacific Coast time. Yum Brands. This was an interesting one. Let's go back to the parent window, and again, I want to rehash. I wanted to jump in there and just say, when Jamie said the word card counting, there's really not a better way to describe the big picture of what's going on here with the AI. We're just counting cards and putting the probabilistics, probabilities in our favor to the tune of high 50s, mid 60%, but that still means that 35% of the time it may not work. So it's not a black box golden system that you can just plug in and have it, make money for you. It is a teaching, it is a assistant, it is a perfect trader to sit next to you and observe. Directional bias is something I've talked a lot about in the past, but I'll save that sermon for another day. That's to just summarize what people are looking for in open house is, in one sentence or not, the way Jamie put it, it's just our way of counting cards. We're just putting the probabilistics in our favor. Okay, where were we going? To a certain trade. Wait for the 8.
Yeah, we're
Okay,
going to go ahead and
so
talk about this
yeah.
one.
I can talk a little bit and give you a break. What he's showing here is this is our parent window. It's a short strategy called Wait for the 8, which is a great strategy. And back to the parent window, we see a few things. Okay, it's a short strategy. It came out of last night with a 77% win percentage and a really nice 6% profit factor. So statistically, that one's looking pretty good coming into today. It only had one trade on the day, but what's very interesting is look at that time stop column. Everything in that time stop column is unique to its own entry price, plus 60 minutes, plus 40 minutes, 45, plus 120 minutes. But this particular strategy, and the only way we would know about it was because Holly in the middle of the night said, hey, you know what, this strategy works best if you're just out by 11 o'clock. So that strategy, that's the deadline, drop dead cut for that. So what we saw today was something funny. We saw Yum executed at 10:57, and it was working, and I'm watching it, I think, yeah, this is an interesting strategy, and then it disappears, and I'm like, where the hell did it go? And so it was kind of a unique situation where Holly only had it for 3 minutes because that's the rule she has. All she does is follow her rules. But when we look at this, we're like, okay, thanks for the tip, Holly. I'll take it from here. I'm going to watch it basically from here. And sorry you had to get out so soon. But this is a classic example of putting our trader's hats on and, overriding Holly on the exit. Her value is on the entry. It's always about the entry for Holly. The exit is more basically because she has to get out by the end of the day. And there are some stats in there, but this is where the trader's hat needs to come on and say, wow, I'm looking at the daily chart of this particular trade, and this looks like an interesting trade. And we even have an example for you for people who say, well, this seems like just a day trading mechanism. Well, we'll show you another mechanism later, but what Jamie's marking up here for you is basically where Holly entered that trade, and 3 minutes later she got out. I mean, there was really no reason to get out, and then exactly on that daily chart as well, candle heading south, looking pretty scary. So you don't always have to get out with Holly. We recommend trying to put your trader hat on and manage the trade that makes sense for you. If that means sell half when she sells half, then great, and let the other half run. That's a strategy that a lot of people do. But it was just kind of a unique situation. We wanted to highlight this particular trade today in Yum in case anybody was wondering why it was only open 3 minutes and it was a winner, or for the most part it was a winner, why it exited so quickly.
Right, and once again, Steve, Holly calls it right here. Just happens to coincide, creeping up on that range break, which looks real nice and beautiful. That's the way you like to see them. And of course, statistically viable. And then the human, me, you, anybody else out there, notices, hey, it's just about to break this range. Then that's what it's all about. And, Holly gets in here, gets out in 3 minutes, and you're like, well, Holly's getting out. Why? Well, that's because, 11 a.m. is the cutoff date. However,
but she
we
left
see
you.
the trade. Yeah,
and she left you her stop. If you're like, well, if I get into this trade and it doesn't work, where do I get out? That red tag right there. Those red tags on those charts are always going to be your stop. The blue tag is always going to be Holly's entry. So you always kind of know where you're looking on the charts by looking at those tags on the right-hand side. So that would have been, a good risk level for somebody who was going to stay in the trade had they so decided to do it.
Right. Once again, I just wanted to harp on the double confirmation. Holly's saying it's statistically viable. It's about to break that range, which is what I like and look for as a trader. You know, what, you know, it's just hard to get better than that. You know, statistically viable, beautiful pattern, boom, we're in. It makes our decision a lot easier.
Here's what's interesting is we're both looking at the charts differently. You know, Jamie says Holly doesn't read charts, which is probably a fair statement, but what she reads is where the numbers are. The statistics and the plots and the plot charts, that's her chart. We see it differently. She probably saw that support level, and she knew that based on statistics and based on numbers. But we as humans are visual, so we read charts much more visually. But it's interesting, as Jamie pointed out, that, yeah, there was no coincidence. That level was at a very critical level. She doesn't read charts with her eyes, but she reads charts with plot graphs and with statistics. And again, for those of you that came late, I dropped a really cool link into the chat window, which shows you the platform of machine learning that Holly is based on and how it goes about parsing out information to get what we want to get and scoring it. Very interesting stuff.
Right, and because this was a trade, and the only reason that we were made aware of Yum is because of Holly, correct?
Mm-hmm.
So then, Steve,
Mm-hmm. You look
notice
at the
what we have going on in the daily, right?
Mm-hmm.
And,
We
we had a nice little excursion. Mm-hmm.
We have some flirting coming up. So maybe we didn't know about this. Thank you, Holly, for letting me know that I should probably set a price alert below that little arrow right there where his mouse is, because if this trade gets below that, there could be some follow-through for a possible short sale.
There could. That'd be like 86.25 to be exact.
And that's a good dovetail, actually, to the next stock I wanted to talk about. Triple D came out today. And a couple people were talking about, do I get in here? What do I do? Well, when I looked at this trade, I thought, that's rather interesting daily chart. If you go to the daily chart, we've got that nice wick, and for people who have been attending my webinars, I really like to look for, washout type bounce wicks. What we've got is 1, 2, gap 3, 4, 5 days of down trading, and then a nice little bounce wick below that 14 level. If you just move to the left, you'll see that 14 level was the prior level of support. Oh, now it's getting more interesting. Basically, we just tried, the price action tried to run the stops underneath that level, reversed, and popped right back up. Well, it was a bit late to the party today. Holly didn't do much on this trade as a day trade, but here's my point, guys. We hear this all the time. Well, it looks to me like Holly is just for day traders. Well, what I'm showing you here is not. Holly brought a stock up to my attention that I would not have otherwise known about. If she wants to mess around with a few pennies, that's cool. If it worked, great, but I would not have seen this chart otherwise. So now this chart is on my swing trading radar. And I've actually got an alert on the highs of today, whatever the high of that wick of today is, it's alert. Tomorrow, if that thing triggers, I'll know about it. And then all of a sudden, I've got a nice, juicy swing trade that was presented to me that I did not find on my own. The AI found it. Now, maybe it was under a little different pretenses in terms of her trying to make 10, 20 cents in the middle of the day, but still, it brought up a very interesting chart at a statistically viable entry level that made sense to me, the human, looking at the chart with my eyes, only confirming what she sees on the plot graphs and the data points that she's looking at. So we're always working together with Holly, and that's kind of the way we like to keep it, having an unemotional, statistically perfect robot that's not going to trade when the probabilities are not there. We don't have to go back to it, but that back on that Holly chart versus the S&P, the Brexit wigged a lot of people out for a few days. And for those of you that were with us, you can just look at it again. The blue line Brexit was a dip down and a dip back up in the major market. Look what Holly did. She basically didn't take any trades, or maybe even took a couple shorts. But she's unemotional. She doesn't get caught up in what's going on in the volatility, and the only way a price trade is going to trigger is if it makes sense statistically. And that's really the bottom line, is what she is. And she's only 10 months old, and it's exciting to see where she's going to be a year from now. You guys are early adopters that are using her.
Yes, because, myself and Steve and all the guys at the company who don't really want to date ourselves that much, but we always sit around and talk about, hey, if we would have had this statistical model, that we could have watched and helped us navigate the markets, wow, how different would things have been? But hey, it's still applicable. It's alive today. It's been out a year. It's relatively brand new. We're the first financial data company to make a artificial intelligence available to the general investing public. So it's a very exciting time right now, and people are warming up to the technology. Our subscriber growth is kind of inverted right now, going through the roof. We're staying pretty busy, and it's because people are receiving this technology and embracing it and getting results. And when you think about it, it just makes a lot of sense. It helps us simplify our trading routine, focus on the quality signals, and the rest of the market, for all practical reasons, might as well not even exist, because if we're living in the statistical probability world, then our chances of succeeding month to month go up significantly. There's just no ifs, ands, or buts about it.
Yes, sir.
Okay, so I was trying to, let's see, there was a couple of other good trades in here that really, if you were, manning the helm today, this REN, Holly called the buy signal right here at 32.39, and if we just get a little line going across there too, whether you participate with Holly initially or whether your eyes go to that pattern again. Of course, REN did have these nice little wiki tops that kind of, ruin everything. However, that's the market that we exist in these days. The wicks are prevalent, not just on the open, but can happen all throughout the day. So if you're a purist and you like to include the wicks, or maybe you like to eliminate that type of activity and just use the bottom or the tops and bottoms of the bodies of the candles, that's a personal preference. Just to be a stickler, I'll include the wicks with these lines. But once again, Holly calls the signal, all right? Highly probable, statistically weighted. And then what do I notice? Even though it's real stretched out, the stock could potentially break that range. And of course, this is indicative of the day where, on an up day where we're moving, you get the penetration and you get this type of action. On a day like today, where there's some sellers in there accommodating the buyers, you might get this sideways movement again, and then boom, we get a continuation. But once again, Holly, nowhere near the stop out, and if we look at the risk off, Holly ended up engaging in the profit save. She'd been in the trade for a while. Things got a little shaky, so she's like, I'm taking my 14 cents. But wearing our trader's hat, if we're in the trade, not really a big reason to get out of the trade. And then, of course, second part of the equation is scaling out accordingly. Once we do get a move in a Holly trade, what are we going to do? We're going to consult the daily to maybe see how much room we have. And if we were looking at REN today, we're like, wow, what a tear the stock's been on. It's popping above these new little resistance or these support levels that it's established, and it's in uncharted territory. So scaling out appropriately, or maybe you got into 100 here, maybe you added another 100 here, maybe you got out of 100 up here, or maybe you're holding some overnight because the daily chart is conducive.
Hey, there's a good question, and it might be a good pivot just for a couple minutes here if people have some questions on how do I. There's a great question from Mr. Wawa, who says, do you have a list of the custom field when we set up a strategy, example, 52-week high plus 200-day moving average? I think what you're saying there is, do we have a way to create a custom scan that can look for stocks making a 52-week high that are also above their 200-day moving average? I guess I'm not understanding your
well,
your
exponential,
okay.
The problem is we don't follow exponential moving averages currently.
Right. But
simple moving average, yeah.
Yeah, and it's just a couple of clicks. It's just a quick configure of the stock making. It's very easy to do.
Sure. We could approach that topic from two different ways. We could do it with a top list and represent those values in column format. Let me just do that.
That's probably what you want. Yeah, I think that's what you're wanting. Using a T.
Real easy to navigate here, and we just, as soon as we pop a, let's see.
It's under year. It's under year.
Yeah.
Position in year.
Okay, position in year range. All right. So all we do is we say we can mandate a minimum or a maximum, or we can just say show column. when we do that, now we have that value pop up there, and the other one is a 200 day moving average. Okay,
Change from
so
first
change
column.
from 200, yeah, and we say show that column. Now, this metric is being represented in graphical format, but if we don't like that, we can go to properties and remove that. So this gives us the numerical value.
So 0 is a 52-week low, 100 is a 52-week high, basically.
Right, so CWEI is not at its 52-week high, but we can see here it's very close, and of course we've had our fingers on the pulse of that one for quite a long time, Steve. Going back to that breakout.
Got that one going. We discussed that with a small 5 million share float, and about 70% of that was short. And you can see what happens when they tell you that if you short a stock, your losses can be exponential. It can keep going higher, and that's the anatomy of a short squeeze. CWEI is the poster boy for short squeezes lately.
Right, and then if we look at the change from the 200-day SMA, and then we can see that CWEI is quite a bit above the 200-day. Of course, we could sort by greatest, smallest. Obviously, the 0 values would be right at the 200. And of course, what we're doing here is we're layering this data on top of a currently existing filter set. So the stock has to meet the filter criteria to even show up on the list, and then we can add additional data in the form of columns that's not necessarily even part of the filtering criteria. So, you know, a lot of people when they first sign up for the product, they don't really get the maximum benefit out of the top list because they don't really understand it. And it's, once again, the beauty is in the simplicity. We can filter with an all or none set on the underneath layer, and then sort a massive list, depending on how tight your filter set is, by any of the metrics that we deem to be appropriate, just by adding them as a column and giving it a double click. So just a real clean and efficient way to manipulate large sets of data with just a couple of mouse clicks.
Yep, that's the best way to keep an eye on many different things at one time, rather than the difference is in a window, we'd have to be programming alerts and events, new high here, new high there, hey, this just did something, this crossed above this or crossed below that. The top lists are a little easier to put together. It's just a set of data, and we can sort it and use it however we want. The more filters you put in, the better, and if they don't satisfy those filters, they won't show up on that list.
Yes, indeed. Yes, indeed. And then, of course, before we cease taking a look at the Holly data, once again, sometimes you get plays like OLN, which, hey, I think we've seen this movie before. Draw that line straight across from the entry point. Statistically weighted entry. Stock's already put in its bottom with a nice little, wick there on the 5-minute candle, which gives us some assurance. Holly's calling it right here. Just not that big of a risk. And then, of course, look, as it cruises through there, busts in that range right there, and then this one just, got critical mass pretty quickly, and whoosh, nice, easy up. And, of course, when we get these nice, quick pushes to the upside, that's always great. But then we have to figure out how we're going to manage the trade. So, 100, 200, 400 shares, whatever your preference is. A good idea is that when we get these pushes, get out a half, give the other half back to break even. Let the rest work for you. That way we can generate some of this risk on profit to the close. And simply stated, risk on is if Holly's getting out, but it looks really good on the chart and you want to stay in, Holly's going risk off. You're going, you know what? I see what you're doing there, Holly. Good job. I think there's a little bit more in this trade. I'm going to manage my risk and go risk on. Try to get a little bit more alpha out of that trade.
Mm-hmm.
All right, so just taking a look at the El Claco here, Steve. We got a little over 5 minutes left, so unless you have any other wisdom nuggets to bestow upon the crowd.
I do have a little bit of wisdom nugget, and like I said, we play the probabilities. Today it didn't work so well, but for those of you who are on open house watching AI this week, I do something that I call directional bias. If you see something come out at a certain time, which today the directional bias was when it was right about, I can tell you exactly when it was. It was when all those pushing through resistance, 730, 735, 729. The AI saw something in the S&P that triggered a lot of long trades, and they didn't work, and that's okay. Sometimes they don't. But what I want to do is at least highlight the fact that when a flurry of trades come out in one direction. Let me give you an example. Let's say you're short something and you're not quite sure if you need to get out here or not, but you're going to hold short. I can't tell you how comforting it is to look over and see Holly go short, 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 and take about 5 or 6 trades in one direction. I call that directional bias. And usually when I see that, and usually it didn't happen today, but usually I'll see a nice turn in the market for 30, 45, maybe an hour in that same direction. So it's kind of like having a great person riding shotgun. You're sitting there thinking, oh, gee, should I get out? Are we going to bounce? Oh, my God, Holly just went short about 5 things. Oh, okay, I'm staying short. So kind of leading you through that little scenario there of a trader who might be trading other things. When you look down and see the unemotional, statistically perfect robot taking a direction with emphasis, that can give you some comfort in knowing that, hey, all right, I'm riding shotgun with Holly. I'm going to stay in my short a little bit longer. Thanks for that. And I've seen it more often than not. But just pay attention. If you'll notice a bunch of trades come out at one point in time during the day, it usually means the market is doing something, and the market filters are actually associated with these trades. What you don't realize is a lot of these trades cannot fire. The strategies are depicting and saying, well, the S&P 15-minute candle has to be green for this to fire green. So sometimes trades don't fire just because the market's not lining up. So when I see a directional bias and everything's a go, whether it's short or long, a handful of trades in the same direction, pay very close attention to what that direction is, and then watch the market over the next half an hour, and see what happens.
Yes, indeed. Once again, another way to learn from Holly. All right. Well, Mr. Scott, if you're listening in the wings and you would like to tell everybody about the special discounts that are available during the open house period, we are ready for you.
Yeah, thank you. So as a way to thank you for attending the webinar, you can use the code that you see on the screen there, AI Trades, all caps, to save 15% off your first month or year of premium, or 10% off your first month or year of standard. You can also go to the handouts panel on your GoToWebinar interface and expand that by clicking on the plus button, and there's a download there for you, and it has some helpful links on those pages that you also see on the slides here. It's a PDF. So the difference between premium and standard, premium has access to the AI, the artificial intelligence Holly, as well as the oddsmaker backtesting tools, price alerts, and some other premium features. We're still accepting enrollees for the open house through Wednesday midnight now, so you can go to tradeideas.com/open house and sign up for that. There's also a contest that we're running, and if you go to the next slide, you'll be able to see some of that information. The contest can be entered at tradeideas.com/price alerts, and it's a price alert contest giving a full year of Trade Ideas Premium to whoever has the most percent gain between Wednesday and Friday. The final time to enter the contest is going to be Wednesday at midnight East Coast. So yeah, tradeideas.com/open house, just under $9, gives you 5 full days of premium access. Even if you sign up tonight or tomorrow or Wednesday, you still get 5 days. So the clock starts from when you sign up. But do it during the week when we're paying special attention in the trading room and the webinars to our open house visitors and the trial. That way you'll get extra information. The webinar is recorded and it'll be up later tonight or tomorrow morning. If you have any questions, email us info@trade-ideas.com. You can follow Steve at Today Trader on Twitter, Jamie Hodges QuantBot, or Dan Merkin's Trade Ideas 1, or you can like us on Facebook, facebook.com/TradeIdeasPro, and we post some original content there. Yeah, thanks everyone for attending. Thanks everyone who's participating in the open house. We appreciate it and hope that you enjoy the 5 days of access. Thanks, guys.